Hello, welcome back. This is Siwing Yi, and today is I'm going to share with you the National Association Realtor newsletter dated January the 20th, 2023. And the article is Existing Home Sales Receded 1.5% in December of 2022. So again, welcome back for this short video. And if you toward the end of this short video, if you receive value from it, please smash the like button and subscribe to my YouTube channel. And of course, please comment below what you think of my explanation and share with me what are your thoughts, where you're watching from, what areas of the country, and just send me some good, thoughtful questions. I'll be more than happy to answer your comments. All right, without further ado, let's go over the article from the National Association of Realtors and key highlights, as you can see right here. Let me highlight this. The key highlights are existing home sales faded for the 11th straight month to a seasonally adjusted annual rate of 4 million. Sales waned 1.5% from November and 34% from a year ago. And the median existing home sales price climbed 2.3% from the previous year to $367,000. And finally, existing home sales total 5.03 million in 2022, down 17.8% from 2021. As last year's rapidly escalating interest rate environment weigh on the residential real estate market. So the big takeaway from so far from this article is the word retreat. The housing market is in a retreat for 11 straight months of reduction of sales. By the way, I have emphasized this many times this past year, especially. Reduction of sales does not mean reduction of sales prices. It is not a correlation. Furthermore, certain metros, yes, they have decreased prices from 5, 10, 15, even 20%, but most of them are in the western region of the US. The boom, the bust, pandemic trophy markets, if you will, in the western region. The south and southeast, many metros in the south and southeast, and most metros in the Midwest of the US have done very well, even this past year. So, there's no such thing as a national real estate market. Real estate is very hyper local, down to the street, down to the neighborhood. So that's what you need to know. So even though I'm reporting the big, high-level national housing market, again, take it with a grain of salt. All right? Whether you are a primary home buyer, whether you are a real estate investor, try to keep this in mind. Focus on the specific market that you are interested in and do a deep dive research and due diligence on a specific neighborhood and street, and surround yourself with a team of real estate professionals that can help you pull the trigger and continue to get educated as well in the right way, and don't go through the other clickbait type of YouTube videos that are very prevalent out there in the wild west of YouTube videos. Wild west of YouTube videos, that is for sure. And I'm being anyway. All right, so let's go down to this article by NAR. December was another difficult month for buyers who continue to face limited inventory and high mortgage rates. Limited inventory and high mortgage rates, said NAR chief economist Lawrence Yun. He further says, however, expect sales to pick up again soon, since mortgage rates have markedly declined after peaking late last year. Just so you know, around October 20th, 2022, the mortgage rate was around 7.3%. Now we're moving to the third week of January 2023. The ongoing rate right now, mortgage rate, is around 6.1 to 6.2%. So it's a full more than 1 percentage point drop, which is a very, very significant drop. So with that in mind, in my humble opinion, there's a lot of room for optimism. But time will tell. No one have a crystal ball, but I'm feeling very good about what's going on moving forward. Okay, let's the next article, the next highlight I want to address is unsold inventory sits at 2.9 months supply at the current sales pace, down from 3.3% in November, but up from our historic 1.7 month supply back in December of 2021. So 4 to 6 months is a healthy, balanced market. Now we're sitting at 2.9 months supply from a nationwide market perspective. To me, is technically still a seller's market, even though in many local market metros, the buyers have a temporary leverage position. So that's what's happening. All right. So the median existing home price for all housing types in December was $367K, an increase of 2.3% from December 2021. So you could make the argument from a nationwide perspective, this past year, from 2021 to 2022, we still have really, technically, we have no price reduction. Think about it, right? You look at the numbers, you look at the data. I know there's a lot of sub data that may refute these findings, but again, you look at the year over year, the home prices throughout the nation has increased 2.3%. What housing crash? What housing correction? Okay, I'm being a little bit out there. All right, home price. Okay, this marks 130 consecutive months of year-over-year increases, the longest running streak on record. Let's do the math. 130 months of continuing house appreciation nationwide, divided by 12 months for each year. We're thinking what? 11 to 12 years of consistent year-over-year appreciation nationwide. So 11 years, today is 2023, so 2011 to 2012 approximately, when we have seen consistent home price appreciation. All right, so take it for what it is, and that's one positive spin you can put on it. Beyond that, yes, we have seen some correction in some markets, reduction in home prices in some markets, but you have to look at housing market from a historical long-term perspective to have a larger sample size to make an informed decision, and don't go by this this last 2 years of comparison. It skews the data, skew, SKEWED, skew the data. Whenever we use the benchmark to compare, whenever we use the benchmark to compare 2021, 2021 is an anomaly, is a 18 months of historical record-breaking year, which would never be replicated at least in our lifetime, in my opinion. So when you compare 2022 to 2021 or 2023 to 2021, it's a small sample size. You have to you know what, I'm saying? You have to take it from a long-term historical perspective to really get a sense of, how the housing market works. So, a lot of YouTubers out there, they, they are the bearers of negative news, negative headlines, clickbait. They always show the data, they manipulate the data compared to 2021. I mean, that's not a fair comparison because 2021, it was an amazing year in many respects. So I'm not going to go any further. I just want to have a quick comment on that so uh, the real data and trends and not overhype misleading clickbait YouTubers out there that are distorting the housing market. Anyway, let me see what else. Yeah, so that's a good sign. Home prices nationwide are still positive, thought mildly. Jung added, markets in roughly half of the country are likely to offer potential buyers discounted prices compared to last year. Yeah, so this kind of incentives are is short-lived, short-term. So for those buyers out there, whether you are primary home buyers or real estate investors buying rental homes, you need to look into deeper about those incentives because it will serve you well for the long run. That's all I have to say. So you all make your own decisions, but don't focus on the doom and gloom, the negativity out there, and all this fear porn that are very prevalent in the wild, wild west of YouTube channels. All right. Properties typically remain on the market for 26 days in December, up from 24 days in November, up from 19 days in December 2021. 55% of all homes sold in December 2022 were on the market for less than a month. So still, more than half of the homes sold recently uh, were on the market for less than a month. So we're still seeing a robust housing market. If homes out there that are presented in very well is going to get sold. All right. So it's not all doom and gloom. Come on, be smart, be a informed, educated uh, home buyer that I hope you are, especially when you continue to watch my YouTube videos because I'll give you true, accurate, uh, uh, transparent, real data, not overhype, not over manipulating the numbers out there like many of those clickbait YouTuber real estate out there, people out there. All right, let's go on. Cash buyers are unaffected by fluctuations in mortgage rate and were able to take advantage of lower prices in some areas, Jung said. Cash buyers, yeah, I mean, we still have people with money who are continuing to enter the housing market because from a long-term perspective, real estate will always make you a massive amount of money. Long-term, 10 years or more. That's all you need to know. Long-term buy and hold. Try and true over the past century real estate. Individual investors. Most of my investors are individual mom and pop investors through my guidance of buying cash flow homes with 25% down payments in the South and Southeast and in the Midwest. And we are doing well. Many of our buyers are cash buyers, some are finance buyers. They buy in a good neighborhood, good markets, and cash flow from day one. Positive cash flow from day one. Okay, so, yep. And distressed sales make up only 1% of all the sales out there. So for those of you waiting for foreclosures or stress homes out there, well, guess what? You're going to be waiting for a long, long, long time to come. All right, single family homes and condos. Single family homes decline to a seasonally adjusted annual rate of 3.6 million in December, down 1.1% from November and down 33.5% from 2021. So again, declining sales does not mean declining prices. How many times do I have to emphasize this? So do not let other YouTubers out there distort your thinking or the mass media. Oh, okay, national media. Anyway, regional breakdown. The northeast section of the US, year over year, in terms of existing home sales, down 28.8%. In the Midwest, existing home sales have falling from 30% from a year ago, from 2022 to 2021. And in the South, is a declining in home sales of 33% year over year. And in the West, there's a decline of 43% of home sales from a year ago, 2021. All right, so what's the takeaway? The takeaway is, yeah, I mean, there's a lot of, wait and see, a lot of resetting going on, a lot of recalibration goes on in the housing market. I mean, it's, still, this is a unique times. It's not doom and gloom. The sky is not falling, and yet it's not a totally positive housing market either. So it's a kind of a balanced situation. But time will tell. I believe with the lower interest rate, the trending down, and inflation is subsiding. We believe the interest rate could reach in sometime this year anywhere from 5 to 6%. That's my undocumented crystal ball. 5 to 6% mortgage interest rate. Then we in for much better times for this year, 2023. So with that said, if you see value on this video, please smash the like button and subscribe to my YouTube channel and comment below what you think of my the data I just shared. What do you think of my personal opinion coming from myself, the 30-year real estate investing knowledge and perspective? So let me know what you think. Comment below, and I will also subscribe to my website so you can become a part of our real estate investing community. For free members, you can receive free information through your email on a weekly basis to learn about real estate investing nationwide. Thank you so much. This is Siwing Yi. Have a nice day. I will see you on the next video shortly. Bye-bye.